Melissa, thank you very much for coming. I mean, fintech is a very relevant topic, especially for people in Zurich, because financial services is a very predominant part of the economy here. Fintech has been a topic for a very long time. We don't know very much about fintech in Asia, so thank you very much for coming to join us today.
Well, I'm happy to be here. Thank you. I'll hold this.
To start, could you tell us a little bit about how you came to the topic of fintech and how you ended up in Hong Kong?
So I was a managing partner at Vantage Point Venture Partners in the Valley. We managed about $4.5 billion. And I had done a startup in the late 1990s, and we manufactured in Asia. And so when we decided to expand to Asia, I volunteered to go over. I thought, this is like doing another startup. It'll be fun. So packed a duffel bag, left Menlo Park, and pretty much moved to Hong Kong, and then set up the offices in Beijing and Shanghai, and spent my first 7 years of Asia at Vantage Point, and pretty much commuting back and forth between Beijing, Shanghai, and Hong Kong. So that's how I got to Asia. And then how I got involved in financial services. Like anything in life, it's opportunistic. We had done a deal with the Chinese Academy of Sciences, and it had gone quite well in the network-attached storage space. And then the Chinese Academy of Sciences, this is when Reuters and Dow Jones sued under the WTO, that foreign financial information shouldn't need to go through Xinhua, that there should be another entity that would allow foreign financial information to come into China. And they asked us to partner with them. And I thought it was fascinating. And I flew around China looking at financial information platforms and thought, my God, this is really outdated. So, rather than injecting the technology they had developed into something existing, why don't we just incubate a new company with CAS, which is what we ultimately ended up doing. And actually got so excited about the sector and realized I'd never have another time in my life where I would see a major currency go global and become so powerful and really influential in the world. And so we decided to dedicate the rest of the time I was at Vantage Point to financial services, and when we started Arbor, it was a natural extension of what we had done.
That's great. And when we come to think about fintech in Asia, the most natural thing we think about is payments. I think payments is one of the areas where China is the true global leader, if I may say. China has turned into a cashless society where you can, do everything with just your phone. You can pay the beggar on the street who has a QR code for you to make your little donation. It is something that is leading the world. And when we think about cashless payments in Europe, we tend to think about Revolut, we think about Twint, all the other applications, but it's really not the same, isn't it? I mean, here we have the app just for payments, but there, because Alipay and Tenpay are really part of larger companies that also have social media, that it's much more a multi-dimensional view of an individual. You see the offline purchases, you see the online purchases. It's almost like WhatsApp plus MasterCard plus Amazon all together in one app. How do you think about that? How is that going to continue to develop?
Well, I think we all get very spoiled by WeChat, and for those of you that are not a user, you can not only, you just leave home with that. It has, you can pay to, as you said, the beggar on the street. You can pay with a vending machine. Everything you can do in the payment space is through a QR code in your WeChat app. I think what's also fascinating is you can invest your money in a mutual fund. So it's not only just about what you can pay, but also how you can invest. You can also do a loan if you need to. And at the same time, you can send money through WeChat. So WeChat particularly is completely integrated into people's lives. And I think that's very much different than what you see in other parts of the world where it's okay, there's a payment app and you have multiple apps. Everything, including your loyalty cards, are all integrated into one place. And really, China has led the world and is leading the world in online payments, and will continue. But I'm carrying 7 or 8 currencies with me right now in baggies. Why? I mean, I should be able to have these currencies on my phone, and I should be able to swap between currencies when I want to and pay for things. But that's just not possible yet, at least in Europe and the US.
And in another area that China has really gained an advantage is this area of microfinance. It's basically reaching out to the underbanked, not only in China, but also in areas like India and Indonesia, where people who have lower income had traditionally had trouble accessing loans. And it's not that the banks were discriminating against them in any way, that they are not credit worthy. Part of it is because, you know, the price and the cost of processing a loan would not justify the actual amount the bank would make on this 100 franc loan. Partly is because there was never a credit worthiness. If you've never taken out a loan, it was very hard for them to give you a score. Part of it is because, you know, in rural areas you don't have physical banks. So China's really led the whole area of peer-to-peer lending, democratization of financial services, giving loans in very small amounts to different people. And now we're beyond that, isn't it? We've moved into on-the-line lending. We had to do everything online for very, very small amounts of credit. Could you talk a little bit about that?
Well, I think it starts with the fact that there's no credit bureaus in Asia except for Japan and Australia is not even in Asia. So Japan is the only country with a credit bureau. So when you think about why this has happened, is because Asia has led the way in using alternative sources of data to actually do underwriting. And a lot of this data is online. So WeChat, for example, has WeBank. So everything they do is based upon the profile that they now know you because you've been using WeChat for a variety of different things. I think the reason this has happened is because companies have been far more creative on how they do underwriting. And therefore, if you can do online underwriting and you don't have a loan officer who's sitting there collecting paper, who's trying to process something, and then a loan committee, and 5 or 6 people dedicated, you can underwrite something that's $20 or $30, and you can do short-term loans, you can do long-term loans. But in Asia today, online lending is just the way it is. I mean, banks did not address the needs of the growing middle class. Banks in China also have certain restrictions on how they allocation of loans that they can make, and every loan has to be renewed every year. And so what you now have, it's not only peer-to-peer, it's institutional to individual as well. But now what you have are these incredibly powerful platforms that have learned to underwrite online, have just better actually NPLs than some of the banks do. And so it's enabled people to be reached almost anywhere, take small loans, larger loans, short-term loans, longer duration loans. And it's clearly changed the industry pretty dramatically and enabled a lot of people to borrow who couldn't borrow in the past.
So what would be a typical case of a loan? What would it look like? What would it be for, and what would be the typical amount?
So let's just take Indonesia as an example. We have a company called Aku Laku. They do point-of-sale financing. So people are borrowing for phones. So smartphones obviously are part of everybody's everyday life. And you can go online and you can buy a phone and you can finance that phone. And in Asia, phones are pretty prestigious, what you carry. It's maybe quite different than in other parts of the world. But they're doing that. They're also financing trips for traveling for the first time. They're financing, goods, clothes that they're buying. Now, that's Indonesia, so it's in micro. In Japan, we have a company that does exactly the same thing, except our dynamic is a little bit different. It's 25 to 35-year-old women who don't want to ask their husbands for the credit card at night. So they've realized they can actually, because they do have a credit profile, they can actually get credit, shop online, and get a consolidated bill, and then go deal with how it's going to get paid. So I think, what you're finding is it's virtual credit cards that no plastic, but the underwriting process is very, very different. Just as an aside, Sesame Credit, which is owned by Alibaba, has 480 million credit records. It's the largest set of credit records in China today.
So would the credit analysis be based on your social media profile or other information they have on you, and it's all done by artificial intelligence, machine learning, and so on?
It's not that sophisticated yet. And actually, underwriting by your social network proved to be a pretty big failure, especially in the Philippines. It is a component of something that's much more complex. So being able to link to your bank account, because you remember WeChat Pay is linked to your bank account, so they can draw down the data. They can actually see your shopping history. So they'll start you off with a very small loan, and then they'll increase your limit as you continue to shop on that website and grow. But is it artificial intelligence? No, I'd say it's data. I wouldn't quite say it's gotten to artificial intelligence. It's actually just using massive amounts of data to say, and I'll give you other great example of how this is happening. Melissa sits in Hong Kong with an American Express card, a US card. I'm shopping in Hong Kong on a website, and I'm shipping to a house in the US, but my mailing address is different. That's a decline generally, right, by a traditional organization, but not anymore today. Somebody knows who I am. Somebody knows that this is my habits. Somebody is willing to take that risk. And so I think the use of data has changed not only, being able to buy things online, be able to pay for it, but also it's just changed the dynamics of the payment industry quite a bit.
And what about on-demand insurance?
It's one of my favorite subjects. I think this is absolutely one of the coolest things. And I'm a Gojek driver. I'm a scooter driver. And I'm in Indonesia, and I want to buy insurance while I'm driving. All I have to do is go on my phone and toggle, and I bought insurance for 3 or 4 hours. That's it. And I can pay for it with my wallet. That's fantastic. I think on-demand insurance in increments that people can afford at that current time when they need it is absolutely the way at least the industry is going to go in Southeast Asia.
And is it just the younger generation that's using this, or is it pretty widespread across all age groups?
I'm not that young, and I love it, but I think it's a good question. You're talking about countries where the average age is 27 or 29 years old, whether it's the Philippines or Indonesia. I think it's just, it's trending across many age groups. Surprisingly, when you look at statistics, it goes pretty well into the 40s. Now, I'm not saying that everybody, in Japan is going to want to give up cash who's well into their 70s or 80s, but we're clearly seeing it much more broadly than just the millennials.
And up to what amount do people use this online insurance? Is it going to eventually displace the traditional insurance market, or is it just something supplementary?
I think it's, in Southeast Asia particularly, it's the creation of the market. I think insurers have been trying to force insurance into a market that doesn't understand insurance, and they don't understand insurance because I pay for this thing once a year and I have no idea what the value is. So I think it's actually going to create new markets instead of just being supplemental. It's actually bringing people into the insurance market that never were in the insurance market in the past.
So it's additional revenues, as you would say, expanding the pie.
Absolutely. I think it's expanding the pie. And I think those that resist it will find it very difficult to penetrate certain parts of the world.
And how transferable are these? For companies that are successful in Indonesia, how easy it is for them to roll the same model in the Philippines, for example?
Yeah, so ASEAN is made up of multiple markets that are very different culturally. I think what we've seen are pairs of countries that kind of work together. So Thailand, Myanmar, Vietnam stands on its own, and then Indonesia, Philippines. For some reason, startups have seemed to go in these pairs. I think with Gojek and with Grab having raised billions of dollars, the test is still yet to come, whether we can see a really ASEAN play. We've seen very few, but I think what's really challenging is the quality of the entrepreneur to actually work across so many cultures with so many, heads of countries. It's not an easy task for any startup.
Yeah. And moving from small amounts to higher amounts. One of the things that the Swiss are very interested in is wealth management. How much fintech influence is there in the wealth management industry in Asia? For example, onboarding, KYC, all the stuff that is giving the Swiss banks a headache. Is this something that is being addressed in Asia as well?
Definitely not in Hong Kong or Singapore. I think it's a headache for all of us. I think banks look at you and say, I don't want to onboard you, because that's their first reaction. But I think the Chinese banks have been more successful at it, and I think in India we're seeing the same thing, maybe because of the global identification system. But I think KYC remains a significant challenge, and I think it's got to get resolved. But I think what's happening is these sort of non-bank banks are really doing almost a lot of the same services as banks. And so if they can onboard people, what's going to happen to the banks if they don't learn to onboard people in a very different manner? I think when it comes to wealth management, it's going to have to be digital, it's going to have to be online, it has to be mobile in Asia. There's no doubt about that. I think if you look at some of the platforms that are growing, Lufax, started in lending, and now they have it's pretty much 50% wealth management, $1 billion of profit in the first 6 months of this year. So it's online wealth management is a big, very large market all over Asia. Now, has it hit the super high end? Not yet, but it's inevitable that this generation will grow up, and they've grown up in a mobile way, and they'll want their services mobile.
And what about Robo Advisors? In Switzerland, there's a lot of talk about asset allocation done by Robo Advisors. It actually frees up the relationship manager to have the human touch. So it is enabling the relationship manager instead of displacing the relationship manager. What do you think?
So we've seen it in Japan, and we've seen it in China somewhat. The robo-advisory is really, it's different. It's bringing somebody new into wealth management. I think that's also, again, it's additive, right? It's somebody who, you have very, people are building wealth, so they're doing it. But when you talk about the ultra high end, I think fundamentally people, talking to people is only out of necessity. But for the basic everyday asset allocation, people want to go to their phone and they want to look at it and they want to change it, or they want to communicate that way. I think one of the biggest challenges for private banks, investment banks, is how do you integrate WeChat and WhatsApp into your product offering? 50% of all trades are negotiated on WeChat in China. It's a headache. So if you don't incorporate chat into your platform with your relationship manager, and maybe that's the way, I think it's going to be a challenge in the long run. It just is the way people do things. When I first got to China, I realized nobody answers their voicemail in our office, and every time I would start calling our team in Beijing, the box is full, and I realized they never listened to any of the voicemails. So you try email. Now email doesn't work. If it's not on WeChat, you just don't get an answer. So I think it just goes to show you how you have to adjust your communication style.
And from a regulatory compliance point of view, how do you expect the banks to capture this additional channel, non-traditional channel of communication between the client and the relationship manager?
We've been looking for a startup that can take voice, WeChat, WhatsApp, emails, and bring it into one system for compliance. If you find a startup like that, please send them our way. Because this is sort of the holy grail in Asia of solving this problem.
And that goes into the direction of RegTech. I mean, there's a lot of compliance issues, there's a lot of regulation. Asia is very diverse, Europe as well. There are fintechs out there that automate that to free the bank from having even more compliance personnel. There's also a lot of concern about cybersecurity, also about fraud detection. Are you looking into those areas as well?
Oh, we love fraud. I love fraud. I think, when you think about businesses that could withstand any market shifts or downturns, fraud is it. I mean, cyber and fraud, criminals work regardless of what the public markets are doing. So on the fraud side, we definitely, underwriting of chargeback risk on credit card transactions, as I've mentioned, we invested in a company in that space. We invested in a company that prevents transaction laundering. So they indexed every single URL on the web, and then they fingerprinted it. So is that flower shop really a flower shop? Are they selling knowingly or unknowingly things they shouldn't be selling? They actually have this live chart of the world, and they show all the illegal transactions going on at any given point in time. But actually, the CEO of this company really kind of made us a little bit nervous. He was at a Visa meeting, And he actually sat there and showed Visa how he set up a website selling bikes online. And behind it, he was selling pornography, and showed them how he processed the transaction through their network, and they never caught it. So pretty cool technology, looking at the dark web. And then cyber everything. I think what's really difficult as an investor is to tell the difference between these cyber companies. So what we've been doing is looking at specific verticals. This week in the insurance side, we were looking at a vertical that actually protects pacemakers. Ransomware is really on the attack. Hospitals are getting attacked. Hotels are getting attacked because now we all have, we walk in with keyless keys into rooms, and they're now holding hotels ransom, that they're getting into the systems and locking everybody out of their rooms so they pay some money. So cyber is one of these industries that will live and breathe and grow in the times we're in, and so we spend a tremendous amount of time in these sectors.
And how prevalent are these applications used among banks in Asia? I mean, in Switzerland, I think for a lot of banks, they are aware of the opportunity that fintech companies offer. A lot of fintech companies do have the technology, they just don't have the clients. But for a lot of Swiss banks is really having, you could say, the courage to disrupt yourself because you're cannibalizing your own very generous margins. A lot of senior leaders will say, why should I stick my head out and adopt fintech when nobody else is doing it? It's not my problem, it's the problem for the next CEO. There's a lot of resistance to change. How is it in Asia?
I think I will give Asian banks a lot of credit that they have lousy infrastructure and know it, so therefore they're less likely to hold on to the legacies they have. I do think, though, I can't say it's perfect. I mean, I think, no offense to HSBC or DBS, but really challenging when it comes from a technology. But here's the thing about the adoption of the technology, Eunice. I think it's actually happening on the periphery. It's PayPal, it's MasterCard, it's Visa, it's Alibaba. These are the companies that are really adopting the technology. It's the new banks that are growing up, N26, right, leveraging all the best technologies that are out there. So I think you're right. I mean, for a startup to deal with a bank, and we have companies that deal with Citibank, 3 years to get a contract. So how does, time to market, how does that really play into their overall plan? I think the banks, the thing is the banks are protected by regulators for now. But if you look at what's being eaten away at their core business, it's the growth of the non-bank banks. And I think that one day we're going to wake up and ask ourselves, what is a bank? And the definition will change, and we'll find that these more innovative companies are much more willing to adopt technology unless banks are willing to change. What's really disappointing is of all the incubators that are out there in the world of the banks, we've seen very little translation into business. Maybe Citi in some regards has been probably one of the more we've seen that is willing to adopt technology. They run a pretty good incubator. I think otherwise, I really can't point to many where we've seen that. However, we do see adoption by the other non-bank banks of this technology.
So is it mostly B2C? B2B is not adapting so quickly?
B2B has always been a longer sales cycle. So in our companies in B2B, I can close my eyes and I can, within the first 5 years, tell you what their revenue growth curve is going to be because of the long sales cycles. So they're adopting it, but it's slow. I'll give you one company we do have that's getting adopted. They've automated debt collection in the US using AI. No more dialers. And we've got PNC, we've got Capital One, we've got Amex. We can onboard one bank a year, maybe two, given all the time that they consume and resources of the company. In the meantime, we onboard these other companies. So I think it's just, whenever you have a startup with banks, you have to have an organization that actually can support the bank. Because the resources they demand is very, very challenging for most startups.
And do you see the banks in Asia starting up themselves, having fintech incubators, having their own people going off-site and trying to do this internally?
Well, I think in Asia, I mean, fortunately in China we have WeBank and Alipay both have banking licenses now that pushes China Merchant Bank and other guys along. I think, well, you look at the banks in Australia, they've done a wonderful job. I mean, CBA, Westpac, and NAB are some of the most advanced banks digitally. anywhere. So they've actually done a pretty good job of adopting the technology. I think in we have the Bank of the Philippines and Siam Commercial Bank in Thailand as investors in the fund. And they're always, the first call I make when we want a POC run, proof of concept, is I call the Bank of the Philippines and ask them to run something. They're very happy to try new technologies. I think, and perhaps it's just a different feeling about the regulator. Hong Kong, has now approved 10 digital banking licenses to try to break the hold that HSBC has had, and they've heard now enough complaints, and they're going to give a license probably to WeChat and Ali, and then a couple other banks will get it. So I think there is this push from the regulators to do things in a much more digital manner, and if the guys who are existing don't do it, they're willing to give out new banking licenses even in a limited fashion.
What about the impact on society? Not just from fintech, but in artificial intelligence or the disruption in general. There's always been a concern of job losses. And here in Switzerland is a very big concern. What about in Asia? Are they moving in the opposite direction? They see it as creating new jobs, training people for new jobs. Are they a little hesitant to adopt or not really?
I don't think at all. I think they see it as a way to move the societies into urbanization and a higher education level. I mean, I think our view is AI is pretty much the new weapon, right? If you can develop AI internally for any country, you're going to strengthen your position in the world. I think we all are scared of the flip side of AI. Wrong hands, wrong information somewhere. I think we've already seen some of that, but I don't think we stop that progress. I think AI is just the same level of innovation as 5G or mobile. It's going to be part of every single industry. Clearly on the healthcare side, which is completely different than financial services, it will change the world clearly for the better. I mean, it will actually help people pretty dramatically.
Now, AI is very dependent on data. And China, clearly, because of the breadth, has a lot more data than a company like Switzerland. Mm-hmm. So if you say data is the new gold, China is the new Saudi Arabia. So for a small country like Switzerland, without enough data, how could fintechs compete?
Well, I think it's a quality of data scientists. I think we were talking earlier about why is Israel so successful, but because the 8200, which is the intelligence unit, is like startup boot camp, right? They go there, they spend 2 or 3 years, they come out and they start companies. And I was giving an example earlier, one company that we've been looking at who does drone insurance. Well, what did the 3 young guys do when they were in the 8200? Their job was to hack into drones around the world. So they got 3 years of hacking into drones paid by the Israeli government, and now they've started a company around drone insurance. Well, they're pretty good at it. So I think it's not a matter of numbers, it's a matter of quality, right? I think, one of the things that we've seen is where education systems are adapting, and this is actually one of the issues that Hong Kong has had, right? Which is the computer science programs in Hong Kong are outdated. People want Python. So I think if the university systems can train some of the best data scientists, I think they then have the capabilities to go develop things. I think Jack Ma said it perfectly. One of the reasons he enjoyed traveling is to open up his eyes to the world and see what's there. And I think if startups and entrepreneurs in Switzerland can look around and look at the problems of the world, there's no reason why you can't develop the best KYC solution that comes out of here. You also have the banking industry here who needs it. So that could then be, exported to other parts of the world.
And what about the role of government policy? A lot of people would say China has lax regulation, that they tend to allow the entrepreneurs to try things, and unless there's a problem, they don't regulate. Here in Europe, we tend to want to discuss the regulation first. Is that a huge advantage in Asia?
Well, I think China has had set a wonderful example of let things grow up in the gray zone and we'll come back and regulate it later, which has actually promoted a lot of innovation. But also I'd look to Japan and say, one of the most scary regulators, the FSA in Japan, has actually been, okay, you need a license for everything, but they've actually developed licenses and they've kept up with financial services and with the times. So I think the challenge comes if a regulator says, we got to study it for 2 years, well then by the time they get around to approving a license, it's outdated. So I think these limited licenses, I don't want to say the sandboxes, but limited licenses where you limit the amount of retail money that's touched, there's no reason why you can't, I think you need that in order to promote innovation. But if you stifle innovation before it gets started, then why would people even start something?
And do you see some of the Asian fintechs coming to Europe? I mean, it seems like it's almost two non-overlapping universes, right? Of course, you have Alipay, for the Chinese tourist here, you have the app, but it's still mostly a Chinese company operating in China. The Southeast Asian ones stay in Southeast Asia. China is too competitive for them to compete in. Are we developing very big regional giants that really have no hope or no ambition to grow globally?
Well, I think Alibaba is going to go global, is going global. I mean, they hired Doug Fagan from Goldman Sachs, right, to run their expansion. I mean, they pretty much have stayed in the Goldman camp with Mike Evans as well. I think we've seen it. We've seen Paytm, their investment in Paytm. We've seen their investment in Kakao. You can pay for a taxi now in Japan with Alipay. So Ali is partnered with Wirecard to be able to accept for Chinese. I think what they've done is smart. You start with a market that you know, which is the Chinese traveler, and you follow them. And then eventually you start to spread out. So I have no doubts that they will be a global rail that will compete with MasterCard and Visa at some point in time. But they've done it in a very systematic way.
And going more in detail into your job as a venture capitalist, I mean, you must get loads and loads of proposals with, lots of promising ideas every day. How do you sort through all this clutter?
Well, I would say there's probably no greater job than being a venture capitalist because I get to interact with super smart people who want to change the world every day. So, that's how I look at it. So we look at about 1,500 deals a year, will come into the pipeline. Easily we sort through those, but it's about having a view and an opinion about where the world's going and then trying to follow it with an investment. So we sort through pretty quickly, right? It all starts with the entrepreneur, so that's first level. A great entrepreneur, a serial entrepreneur, someone recommended by our network, is something we'll focus on, and then we have very strong opinions, obviously, about sectors that we care about, whether it's insurance on demand, it's fraud, it's cyber, and then we stay very deep there. And we also have quite a strategic LP base that we leverage off of to figure out where the discontinuities and the problems are, and areas where we think, companies can actually change the dynamics.
And are there certain traits that you've identified that have made good fintech companies?
Well, I don't know about good fintech companies, but we've done a lot of work with a psychologist around great entrepreneurs, and they're usually a little bit narcissistic, Machiavellian, and a little bit of a psychopath. We've done a lot of looking at our own entrepreneurs, and the ones that you tend to really want to go sit down and have a glass of wine with are probably not the guys you want to back. So I think, there's more and more now being written about CEOs and what it takes. And it's not, it's generally people who have some very specific traits, have had challenging lives at one point or another. But we continue to analyze this, and we actually hired a psychologist out of the Valley who's been studying this issue for quite some time to help us continue to develop our own analytics, because I think the venture industry is also changing our own analytics to really sort out, source the right entrepreneurs.
And within fintech, because it's financial services and technology, do you tend to find people who are, former bankers? Are they IT experts? Are they straight from universities? Where do they get the ideas? Where do they find the proof of concept?
I think it's two camps. So we've done a knowledge graph of the most successful fintech startups, and it's Goldman Sachs and McKinsey in the lead. So we have done that to see where is the talent actually coming from. Yeah. But PayPal, the PayPal mafia, obviously made famous by Elon Musk and Peter Thiel, is not just the US, it's actually global. So there's a PayPal mafia in Israel from Fraud Sciences, there's one in Asia as well. So I think it's these clusters of people that are coming out. Sure, you can get people directly out of school, but generally somebody has to have experienced some problem in their life to make them want to give up everything and really just focus on one thing so intently. And really, it's a big sacrifice for most entrepreneurs.
And what about geographically? You talked about the segments that you're looking at, insurtech, regtech, cyber fraud, everything. What about in terms of geographies? I mean, a lot of the Asian companies are really horizontal, isn't it? They don't really operate in a special silo. They do everything. Would you have a preference for those because they have more room to grow horizontally, or what do you usually look for?
I think it's different. We clearly know when we invest in Israel, it's pure tech, right? And the US, it tends to be business models that we just don't see anywhere else. But in Asia, it's a great question because who would have thought that Gojek and Grab were financial service companies, right? In the beginning. And we just did an investment in Beam, which is a scooter company. And at our investment committee, I got a question, well, how is this financial services, Melissa? And I'm like, well, would you have thought that Gojek and Grab were financial service companies? So I think that is exactly the right question. You have to open up your mind as to what does a financial services company now look like? And I think when you do that and you open up your mind as to what the consumer is actually going to do and what you can then deliver, but it became very clear to us that it's all about aggregation of flows. And even if you look at what Priceline has done, which is part of Booking and Kayak and Agoda, is they're now creating their own payment network. So I think you have to change your whole perspective and get rid of what you actually thought was once a financial service company and say, financial services are going to be delivered very, very differently, and you just have to be incredibly open-minded about that.
And what are the chances of European banks becoming dinosaurs? I mean, 50% of fintech funding went to Asia last year. The US with Silicon Valley is clearly very much ahead. What do you hear coming out from Europe?
Well, I think Europe is underrated. I said this earlier, I think you have some clear winners. You may not have thousands of companies, but let's face it, Klarna was the first of its kind, right? Point of sale financing. Now you have a firm in the US, which is Max Levchin, who's the co-founder of PayPal. We have Paydi in Japan, Akulaku. We've seen some business models out of Eastern Europe as well. So there you go, Sweden, clear leader, and really, established a business model. I think transfer-wise, on the FX and remittance side, we've seen a lot of good companies coming out of the UK. Revolut, on the international credit card side, credit card companies could have easily done a multi-currency credit card that would have made life a lot easier, but they were making way too much money from all the FX fees, and so they decided not to do that. Well, Revolut now has 3 million customers. Or you look at N26, who said, okay, we don't need to build the technology, we're just going to leverage all the best of technologies. Or CoverFox on the insurance side. So I think Europe is completely underrated as far. It may not be thousands of companies, but the quality is very, very high. I think PSD2 is going to actually provoke some other innovation that actually will then extend to Australia because they're going to follow in the open banking suit. So I think it's under-invested on a global basis, but also underrated to say that Europe has clearly created some fintech leaders.
And how important is it for these fintech leaders to say, we're not going to disrupt the bank, we're going to work with the bank? They have the clients, we provide the technology.
I think Fintech 1.0 was about we're going to kill the banks. Fintech 2.0 has been we're going to collaborate with the banks. And I think the next time around people are going to say they're too slow and they're going to try again and now they're going to partner with other financial institutions, and I think banking licenses are going to become a little bit easier to get, and again we're going to get back into the definition of what is a bank. But I think if the banks don't become easier to work with, then I think, again, when things become so difficult, we see disruption.
Now, you've seen so many different fintech companies, and it's becoming very clear to us listening to you that if you were to start a bank today, it would not look like a UBS. So if you were to be given a white piece of paper to start a bank, what would it look like?
Well, I would make, first of all, there's enough new technology to actually have the cost of maintaining an operating account down to 50 cents. So I would rebuild the infrastructure. I would also rebuild the infrastructure so you could layer other people's apps on top of it fairly easy. So I think some of the banks are doing that. But I would actually redo the KYC onboarding process using all the best technology that's out there. And that's really, I think, the challenge. And then I would actually segmentize the bank. I would go after a specific sector that's underbanked. And not underbanked necessarily in the traditional sense, right? Underbanked in the sense that, I think Westpac did an amazing job in their women's bank. They make a huge amount of profit. I think 50% of the household income in Asia is controlled by women. And yet in Hong Kong, if you have a joint credit card with your husband, you need his approval to get the statement. So I think there's a lot of areas of Asia where women-owned SMEs are underbanked, right? So I think it's not only women, but I'll give you another great example. There was a startup bank in Hong Kong about 2 years ago where they were just going to service BVI and Cayman Corps. Nobody wants a BVI or Cayman Corporation anymore. And so that all they were going to do is service those corporations. So I think it's going to be, if I had to do it today, I probably would start a bank that does that, right? Because every Chinese citizen pretty much and every Hong Kongese citizen has a Cayman Corporation. I would just set up a bank to do Cayman, and I would do all the FACTA compliance, and I would do everything, from a technology perspective.
And would you see the margins and profitability of the whole sector coming down, given what you said?
I don't know if it's coming down. I think what's really interesting is we have this new great chart we've been trying out for before every meeting, which is the world is going to zero. Zero MDR, zero brokerage fees, zero loan origination fees, zero credit card fees. So the real question is, how do you monetize a customer now? And that means it's a broad base of services that you're going to have to offer. But we are in the world of zero for now. And when you think about that, it's not about that one particular fee. It's about how I have this entire holistic relationship with the customer across many different facets.
Now, zero is okay when you have venture capital funding, but at some point the companies have to generate revenues from somewhere, no?
Yeah, absolutely. And I think what they're going to do is they're going to monetize in other areas, right? So they're going to have premium services, or they're going to have subscription services. I think that's where we're seeing brokerage go to now, which is JP Morgan and Fidelity and reaction to Robinhood said zero fees, but when you really look at it, it's if you're a client and you trade a certain amount. But I think what we clearly know this is on the table, that they're going to go to a Netflix model. All the trades you want for $10 a month or whatever it is. Now, they weren't the innovators in this, by the way. It was the clearinghouses who decided to break down the bottlenecks for the startups and say, we're going to charge very low fees, no volume required. And once they did that, they opened up this whole door for all these startups to come into the brokerage industry and just, say 99 cents, lower the fees, or go to subscription models, which made JP Morgan and guys like Fidelity have to react.
So scale would be very important. It's kind of one of these winner-takes-all scenarios when you have Netflix. Mm-hmm. You only need one Netflix, you don't need something else. That makes it very, very competitive. Very,
and I think that's now what we've seen is capital is now another competitive advantage. So if you get an investment from Alibaba, Tencent, SoftBank, these massive pools where time to market of going public is no longer a pressure point, and there's just, obscene amounts of money going in, you got to scale is everything.
Very interesting. And before we open it up to the audience, let me ask you about the role of women. I recently read that in the US, in 2017, last year, out of all the venture capital funding, 2% went to female founders. 80% went to male-only teams, 12% were mixed gender teams, 7% were undefined, whatever that means.
Well, in California, that can mean a lot of things.
Exactly. Does this reflect the fact that there's really only 2% of entrepreneurs are women, or is it harder for women to get venture capital funding?
Well, I think it's twofold. One, I wrote a blog called #Enough is Enough Silicon Valley. I mean, I think in Silicon Valley, this issue's been going on for 25 years or 30, forever. And I think it's, I think it's twofold. One, we have a shortage of women studying math and sciences. And if you're going to do a technology startup, unless you're really brilliant at marketing, product marketing, then generally it's been a technologist. So part of the issue in the US is, I think, is just the flow. It's going to take time, right? We keep trying to band-aid it by every venture firm this year. We now have a partner. Okay, great. I was the first woman partner at Vantage Point. But that doesn't solve the problem. It doesn't solve the problem also for women entrepreneurs. We need women entrepreneurs who go through the same path as men do, which is studying math and sciences, who have an interest in starting a technology company for the most part. Or maybe it's not a tech company, but it's something that's backable by VCs. Asia's quite different. And we can thank maybe communism for this, but in China, men and women have been working for a very long time, and it's been essentially fairly gender-free. And also the infrastructure, the family and help is not a problem, so people don't have to choose between, daycare or making sure their child is home with proper care. So Asia has made it a lot easier for women to go work and have a career and yet still have a family, and taking off a lot of the pressure. The US is just, it's out of balance. It will remain out of balance for quite some time. And I think it's just structural.
Thank you very much. Let me open the floor up to questions, which I'm sure there are a lot from the audience.